11.19. Problem number 6. Sri Mehta of Bombay consigns 1,000 cases of goods costing 100 each to Sri Sundaram of Madras. So Sri Mehta of Bombay is the consignor and Sri Sundaram of Madras is the consignee. So let us start in the books of Sri Mehta. In the books of Sri Mehta, we have to prepare consignment account. And who is the consignee? Sri Sundaram of Madras. Sri Sundaram account in the books of consignor. Sri Mehta of Bombay consigns 1,000 cases of goods costing 100 each to Sri Sundaram of Madras. Are you all ready? So Sri Mehta is sending 1,000 boxes to Sri Sundaram of Madras. Cost price of each box is 100. 1,000 into 100, it is 1 lakh rupees. It is 1 lakh rupees. Hence tell me now, what are the two entries that strikes your mind when you say talk about goods sent on consignment? Goods sent on consignment account that are to trading account at cost price. Second entry is consignment account that are to goods sent on consignment account. The consignment account will give a debit to goods sent on consignment 1 lakh rupees, 1,000 boxes. Next, Sri Mehta pays the following expenses in connection with consignment: carriage 1,000, freight 3,000, loading charges 1,000. So carriage is 1,000, freight is 3,000 and loading charges 1,000. Add all those three expenses, 1,000 plus 3,000 plus 1,000. Totally it is 5,000. Consignor is paying some amount. What is entry we write? Consignment account at R2. Consignment account at R2 cash account. 5,000 rupees. Consignment account at R2 cash account 5,000 rupees. Again, this is paid for 1,000 boxes. Okay. Next. Sri Sundaram sells 700 boxes at 140 per case and incurs the following expenses: clearing charges, warehousing and storage, packing and selling expenses. It is found that 50 cases have been lost in transit and 100 cases are still in transit. Sri Sundaram is entitled to a commission of 10% on gross sales. Draw of consignment account, Sundaram's account in the books of Sri Mehta. So let us go one by one. Sri Sundaram sells 700 boxes at the rate of 140 per box. So please type on your calculator 700 into 140, 98,000. Please tell me, do you have any bad debts loss in the problem? No. So we can safely assume all the goods were sold for cash. So who is receiving the money? Sri Sundaram. We are selling the goods, sales. Sri Sundaram is the receiver and goods are going out, sales income. So what is the entry that comes to our mind? Sri Sundaram account at R2 consignment account. Sri Sundaram account R2 sales. In place of sales, we'll write consignment. So write here by Sri Sundaram 98,000. Sri Sundaram account to consignment 98,000. Next, after 98,000, what is the next expenses given? Clearing charges paid by Sri Sundaram. The goods have gone by a ship because Mumbai is a port and Chennai is a port, so they have sent the goods through a ship. So the goods were unloaded at the shipyard. To remove the goods from the shipyard, you have to pay some fees to the shipyard authorities. How much you have paid? Clearing charges 850. Warehousing and storage, that is go down 1700. Packing and selling expenses 600. Add all those three expenses, 850, 1700 and 600. 2300 plus 850, it is 3150 rupees. So what is the entry you pass when consignee is paying expenses? What is the entry in the books of consignor? Consignor account debtor to Sri Sundaram account. How much? Sundaram. Consignment account debtor to consignee, no. How much amount? 3150. Sri Sundaram account will be credited by consignment. 3150. Is it clear? Next. It is found that 50 cases have been lost in transit. 50 boxes have been lost in transit. It's an abnormal loss. I think you remember goods lost by fire. What is the entry we used to pass? Goods lost by fire account at R2 trading account. We wanted to remove the cost price of goods lost by fire from the debit side of the trading account, because we said only cost price of goods sold can be debited to the trading account. But trading account is debited with total purchases. Out of them some goods are lost by fire, so we remove the cost price of those goods by crediting the account. Similarly here also, 50 boxes have been lost in transit. What is it we are going to write? Goods lost in transit account at R2 consignment account. By goods lost in transit, 50 boxes. 700 was sold, 50 lost in transit. Valuation. Valuation of goods lost in transit. Valuation of goods lost in transit. Particulars. Calculation. Rupees. Look at the board, everyone. Debit side of the consignment account, we should show only cost price of goods sold. But we have debited with cost price of 1000 goods. We should have only debited it with cost of goods sold. The cost price of goods lost in transit is also included in this. It has to be removed. Cost price of goods lost in transit, 50 boxes into 100 rupees each, 5000. 50 boxes into 100 rupees each, 5000. Add proportionate consignor expenses. On these goods, consignor also spent some money, no? For 1000, he spent 5000. For 50, how much he has spent? 250 rupees. Next, consignee expenses nil. Why nil? The goods have been lost before he received the goods. No? The total is 5000. 250. So what have we done? We have removed the cost price of these goods from the consignment account. If nothing is realized from insurance company, entire amount will be shown as a loss in the profit and loss account. Okay. If you don't pass this entry, what will happen is this. If you don't pass this entry, this 5250 will be remaining in this. It will eat away the profits of consignment business. We'll assume that we'll feel that consignment business is not making profits. Actually, the business is making profits, but the goods lost in transit has eaten away those profits. Everybody understand? Continue. Next. And 100 cases are still in transit. Another 100 boxes are still in transit. That means I normally draw a small diagram for you people. What else you want? Listen to me. There are two ships. Ship number 1, big ship. Ship number 2, small ship. Actually, there is a lot of gap. Hundreds of kilometers gap is there actually between both the ships, but because our board has limited space, we draw according to our limitations. Okay. Now, what does the problem say? How many boxes are still in transit?
100 cases.
Okay. 100 cases were loaded here on the small ship. It is still coming. It is very slow. Small ship, no, slowly coming. Okay, on the way. Big ship. Listen very carefully. How many boxes totally? Totally we have said 1000. 100 is still in transit. 900 was loaded in a big ship. Out of this fell into water. 50 boxes. So it is seeing this boxes. So 50 boxes fell into the ship. Out of 900, 50 were lost in transit. So how many were unloaded at the shipyard? 850. Out of those 850, how many were sold? 700. 700 were sold. So how many are unsold? 150 are unsold. Is it clear? So we have 100 units which are still in transit. Out of 900 boxes, 50 boxes in the sea, 850 boxes unloaded at the shipyard. Out of 850 boxes, 700 boxes sold. 150 should remain in closing stock. Now, my question is, these 100 boxes, these are boxes sold or boxes unsold? Sold, unsold? They have not reached us. There is no question of selling them. So they are equal to unsold boxes. Unsold boxes or closing stock, treatment is one and the same. Okay. But 850 boxes reached the shipyard. 900 were loaded in the ship, but one fell down, no? So 850 boxes reached. 700 sold. 150 closing stock in hand. So closing stock on sea 100. Closing stock in hand 150. So where do we show closing stock? By consignment stock. 150 boxes, value question mark. By goods in transit, 100 boxes, value question mark. Why am I writing both of them here? Both are unsold goods, no? This is unsold, this is unsold. If unsold goods is shown here, this is also unsold goods, hence it has to be also shown here. Next year, both of them will become expenses. Closing stock, next year they will come to the opening stock set. Write down valuation of closing stock in hand. Can I rub my diagram? Valuation of stock in hand. Particulars, calculation, rupees, cost price of boxes, cases, 150 into 100, 15,000. Add proportionate consignor expenses. Can you tell me the calculation? Proportionate consignor expenses. 1000 cases, 5,000 rupees. 150 kenta. For 150 how much? 1000 if it is 5,000. For 150 how much is it? 750. Now these goods were received by the consignee, unsold. On receiving the goods, to move the goods from the shipyard to the godown, consignee has spent clearing charges. How much? 850 rupees. Yes, it is a non-selling expense. All remaining expenses are selling expenses. Add proportionate consignee non-selling expense. Now please tell me, first of all, from the big ship, how many boxes were unloaded at the shipyard? 850. So from shipyard, how many boxes consignee has transported? 850. Out of 850, how many are unsold? 150. So for moving 850 boxes, he spent 850 rupees. For 850 cases, he spent 850 rupees. Out of 850 boxes, how many are remaining? 150. So amount is also 150 rupees. Did you understand? From the big ship, how many goods were unloaded? 850. How many were transported? 850. For transporting 850 goods, how much he has spent? 850. Okay. You made a mistake here. How much is it? 15,000 total. 15,900 is the value of consignment stock. This is 150 boxes in hand. See the board once. 1000 received, 700 sold, 50 lost, 150 in hand, 100 in transit. Tally, no? Is it tallying or no? Now we have to find out the value of goods in transit. It is also equal to unsold goods because we have not received it, we have not sold it yet. Hence they are also equal to unsold goods. Valuation will also be equal to unsold goods, but these goods have not been received. Consignee has not spent any amount on this. Hence we are not going to include any consignee expenses, but we are going to include consignor expenses. Right now, valuation of goods in transit. Valuation of goods in transit. Valuation of goods in transit. Particulars. Calculation. Rupees. Cost price of goods in transit. 100 into 100, 10,000. 100 into 100, 10,000. Add proportionate consignor expenses. For 1000 it is 5,000. For 100 how much is it? Next. That's it. Why that's it? Because on these goods consignee has not received the goods. Consignee has not spent even a single rupee on these goods. Total. 10,500. So did you understand what we have done? See, initially we debited the cost of 1,000 goods here, but later on we came to know that only 700 have been sold. The cost price of remaining goods has been removed by crediting the account. Follow matching concept: sales minus cost of making the sale to get profits. Is it clear, everyone? Did you all complete this? Now see what is the commission entitled to Mr. Sundaram. Sri Sundaram is entitled to a commission of 10% on gross sales. Sri Sundaram is entitled to a commission of 10% on gross sales. Gross sales is how much? 98,000. 98,000 into 10%. How much do you get? 9,800 rupees is the commission which is entitled to. What is the entry that comes to our mind? Consignment account debtor to Sri Sundaram account. 9,800 by consignment. $9,800. Did you all complete? Now calculate profit or loss. You don't have any insurance claim, etc. No. Calculate profit or loss. Right side is more. How much? 1,29,650 minus these items. 11,700 to general P&L account. Sri Sundaram account. 98,000 minus these amounts and tell me how much is the balance left. By cash, how much? 85,050 rupees. What is the entry will write? Cash account debtor to Sri Sundaram account. Sri Sundaram will submit an account sale saying that this is the sales I have done, these are my expenses, this is my commission. Remaining amount, you please take a check. Along with the account sale, they'll attach check and give it to us. We'll put that check in our bank account. Okay. Did you all complete? Now write down accounting in the books of consignee also. Let us learn the entries in the books of consignee. Accounting in the books of consignee. Accounting in the books of consignee. Underline. Till now we have learned only how to account for in the books of the principal. Now we will learn how to do accounting in the books of the consignee, the agent. Write down. Accounting in the books of the consignee, the agent. Write down, everyone. When goods are received on consignment. When goods are received on consignment. When goods are received on consignment. Loudly tell me what is the entry in the books of the consignee.
No entry.
Very good, no entry. Why? Only for selling there will be entry. What did he say? Before me he said no entry. You told me. Why no entry? Because he is not paying anything, boss. He is only receiving the goods. He is only an agent. He doesn't have ownership right on these goods. That is why no entry in the books of the consignment. Next. Next. Next, write down. When no declaratory commission is allowed. Underline. When no declaratory commission is allowed, write down A. When goods are sold on credit. When goods are sold on credit, right? No entry. Only memorandum records will be maintained. Only memorandum records will be maintained. That means what he'll do is he'll prepare a list of debtors. That's he'll not pass any entry in his books. Next, when cash is collected, or cash sales is done. When cash is collected or cash sales is done. Cash is collected, cash sales is done. Now he is receiving cash. Consign is receiving cash. But this money is not mine, consignor's money. So tell me what is it you should pass. Cash account debtor to consignor account. Write down entry. Cash account debtor to consignor account. Cash is coming to me, but it is whose money? Consignor's money. So he will be shown as creditor. So for cash sales, same entry. For collection from debtors also same entry. When there are bad debts. Fantastic. When there are bad debts, entry will be no entry. Then who will record bad debts? Consignor. When there are bad debts, no entry. You will say bad debts will be recorded by the consignor, not by the consignee. Why? He has not been allowed any declaratory commission. He is only getting ordinary commission. Normally, declaratory commission is expressed as a percentage on total sales, credit sales, cash sales, total sales. Sometimes, by agreement, they can say it is a percentage on credit sales, but normally it is only on total sales. What is overriding commission? Commission given to consignee to put additional effort for introducing a new product or to sell a product at a higher price. That is called as overriding commission. But declaratory commission will give consignor protection from bad debts. If you don't allow declaratory commission, no protection from bad debts. Next. Next, write down. Write down everyone. When declaratory commission is okay, when declaratory commission is allowed, underline. A. Goods are sold on credit. If derogatory commission is allowed, consignor will treat every sales as cash sales. Now who has to keep track of the debtors? Consignee. Consignor is going to keep track of me. I have to keep track of debtor. Consignor will make me debtor. I have to make debtors in my books now. Write down entry. Debtor account, debtor to consignor account. What entry, sir, is this? Debtors are receiving goods, personal account, receiver, debit. Sales is not my income, consignor's income. Hence give credit to consignor. Debtor account, debtor to consignor account. He is debtor to me. He is creditor to me. Who is he? Consignor. Who is he? Debtor. Who am I? Consignee. So debtor is my debtor and he is my creditor. When I sell goods on credit, he becomes creditor, he becomes debtor. What is it to write? Debtor account, debtor to consignor account. Consignor account. Okay. Next. B. When cash is collected. When cash is collected. Cash account, debtor to debtor account. So this amount should go to consignor, no? Already we have made him a creditor, no? 2 times you make creditor, he will feel happy. You make 1 lakh credit sale, you make creditor again. You collect money, you again make him creditor. He demand 2 lakh, you pay 2 lakh to him. Cash account, debtor to debtor account. Is it clear? Next. When there are bad debts. Now there, the debtors are now our debtors, boss. We have to now record bad debts loss because he says, I am blind to bad debts now. I can see only cash sales. Any sales you say, it will come to my ear as cash sales. Whatever you say, I can hear only cash sales. So you cannot hear any bad debts. So who has to record bad debts in his books? Consignee. Write down entry. Bad debts account, debtor to debtors account. Bad debts account, debtor to debtors account. Clear everyone? Bad debts account, debtor to debtors account. Did you all write? Very good. Continue. Next. When bad debts is debited to his commission income. Now who has to suffer this loss? Consignee. He will debit it to what? Commission income account. Papa. Right now, when bad debts is debited to his commission income. Normally, where did he teach you to debit bad debts? P&L account. Or else provision for bad debts account. But now I am saying you should be debited to commission account. Write down the entry. Commission account, debtor to bad debts account. So exam question will come. When derogatory commission is allowed, who will suffer bad debts loss? Answer you will say consignee. Where will consignee transfer that loss? Commission account. Net of bad debts, whatever income is left, it will be transferred to his profit and loss account. Whose profit and loss account? Consignee's profit and loss account. Continue next. When goods are sold, below that you write. Below that you write. Commission income net of bad debts will be transferred to P&L account of the consignee. Commission income net of bad debts. Commission income net of bad debts will be transferred to the profit and loss account. Full stop. Next, write down. Write down next. When goods are sold for cash, somebody, cash is coming in. Cash account debtor to consignor. డబ్బు కాదది, consignor డబ్బు. Cash is coming in. Whose cash is it? Consignor's. Cash account debtor to consignor. Personal account giver of money. Sir, he is not giving, no. Customers are giving. Whose money is it? Not customers' money. Consignor's money. Cash account debtor to consignor. Okay. So how to write entries when declaratory commission is not allowed? How to write entries when declaratory commission is allowed? You understood, no? Next somebody. When commission is made due or when commission is earned, E-A-R-N-E-D, earned. When commission is earned by the consignee. Now it is my income. It is my income. Nominal account, credit all incomes and gains. 2-line entry. Go to second line. Write to commission. Will I get it in cash? No. I have debited to whose account? Consignor's account. Write down. Consignor account. Debtor. Consignor account debtor to commission account. This is the entry for commission income in the books of the consignee. Clear? Next, when consignee pays expenses, when consignee paid expenses, underline. When consignee paid expenses, write down. Consignee is paying money. Who will give it back to him? What is entry like? Is it my expense? Whose expense? Your expense, I am paying. Your expense, I am paying. Your expense, I am paying. You are my debtor. Write down. Consignor account debtor to cash account. Over. These are the entries we write in the books of the consignee. Now let us discuss few more concepts also. I think we discussed how many concepts till now? 4. Which one we discussed? Subordinity, going concern, cost concept, money measurement concept. Let us discuss some more concepts. Consistency, prudence, conservatism. What more you want? Matching, periodicity, accrual, realization. material. So let us discuss these concepts also.